I want to talk about the India is really fudging GDP data and inflation data, but the exchange rate you can say it will be unfakable because India is saying our GDP is growing by 7% or don't know what numbers they are giving 7, 9, 8. We don't know how and where it is growing. uh, the GDP rate with such numbers and the inflation data like CPI. We are saying that CPI data is very less. It is going very down. So what are those numbers we are not getting? So today we will talk about that. A simple explanation with the real numbers. So first you suppose there are three report cards for India's economy. First is GDP growth, so how fast the country is getting richer. So government give this mark. And inflation, how fast prices are rising. Government give this marks to. Rupee versus dollar rate. What the world actually thinks of India's money. Millions of traders decide this every day in the market. No one can fake it. So here what each one say right now. So it will be explained in very simple words. There is a report card of GDP growth, inflation and rupee versus dollar in the market term. So what the government say about GDP growth? India grew 6.5 to 7% last year, which we call as super fast. The real life example, government says a family earned 100 rupees last year and 107 this year. The 7% richer. And inflation report card, government says prices rose only 4 to 5%. Real life example, we can say government says a 100 rupee grocery basket now cost 104 or 105 rupees. And report card of rupee versus dollar, government says what says, but government doesn't control this. So 1 year ago $1 equal to 83 rupees, but today $1 is equal to 89 rupees, 0.6 rupees. Rupee lost almost 8% of its value in 12 months. Why the rupee is the honest friend? If India was really growing 7% and price rose only 4 to 5%, the rupee should stay strong or get a little stronger like it did in 2004 to 2008 when $1 stayed around 40 to 45 rupees. But the rupee fell from 83 to 89.6 in just 1 year. That is a big drop. It is a data of today, 22 November 2025. It is the latest data. When the rupee falls this much, it means the world doesn't fully believe the happy GDP and low inflation story of India. Everyday proof you can feel. So item petrol imported. So price 1 year ago 95 rupees per liter. Price today 104 per liter. It is a 9% increase. iPhone imported 1,20,000. Price 1 year ago. Price today 1,35,000, which was which is 12% increase. Cooking oil imported palm oil. Price 1 year ago 120 rupees per liter, but today 145 rupees per liter, which is 20% increase. So these prices went up much more than the 4 to 5% inflation number. Why? Because the rupee became weaker, so everything we buy from abroad costs more. So simple conclusion with numbers. Government story. We are growing fast, 7% and prices are almost under control, 5%. Market story. We don't fully believe you. That's why $1 now buys 89 rupees instead of 83. The rupee is like millions of people voting with their money every day. You can adjust numbers on paper like GDP and inflation, but you can't force the world to accept a weak rupee as strong. That is why many people say you can fudge GDP and inflation numbers on paper, but you can't fake the currency rate. So it shows the real health of the economy. So thank you.